The Indian market opened sharply higher following a recovery on Wall Street overnight. Key indices are almost 1% higher, with the Nifty firmly above that 24,300 mark. All sectors trade in the green. Banks are the relative underperformers by gaining 0.75% as against the others at 1%.
Well, Eicher Motors is thumping ahead with a 4% gain on the back of the company's first quarter numbers. Revenue rises 10% on a year-on-year basis. Net profit too surges by 20%. Goldman Sachs, they raised the target price to 5,600 rupees a share.
Biocon earnings missed street expectations in the first quarter. Management in the conference call says Q2 will also be relatively muted and some momentum will be seen only in the second half of this year. The stock under pressure in an otherwise strong market.
Kochi Shipyard surges more than 5% after reporting a strong quarter led by the company's ship repair segment. The revenues rise 62% on a year-on-year basis. Margins as well expand. The stock up 4%.
Ola Electric makes its debut on the exchanges. The stock lists on the NSE at the issue price of 76. Thereafter sees a rally of 15%, currently at 87.
Hello and welcome to Chartbusters. I'm National Souza. Joining me as always is Mangala Malu. It's a Friday morning. It could be a freaky one for the starters, though the first start of trade has gone to the bulls. We're still up close to 200 points, coming off a little bit from the top. The ingredients are in place to have a good session. Let's hope, getting into the weekend, the bulls can fight back, because otherwise the bears, throughout the trading sessions that we've seen on a day-to-day basis, markets start off in the green, but the bears do fight back at some point of time. Mangalam, interesting times.
Interesting times. It's exactly the good length balls that we keep talking about, Nigel. You know, you don't know whether you're going to go front or go backwards on that one, because where the Nifty is at right now, 24,324. Over the last 4 trading sessions, it's faced supply at exactly these pretty levels, 24,350 to 24,400 thereabouts. Let's see where it goes from here. But a lot of individual stocks on our radar this morning. We have Alembic Pharma reported a slightly muted set this quarter, led by weakness that we saw in their API business along with the rest of the world business as well. We do have with us Pranav Amin, who's the managing director of the company, joining in. The stock lower by about 1.5% in an otherwise strong market. Thanks a lot, Pranav, for joining in. Just a couple of questions first. US, you had a target of close to around 25 ANDAs to be launched for this year. How many have you launched in the first quarter? What's pending for the remainders? And this quarter saw weakness because of API and the rest of the world business. Where do you see pickup here? And on the back of that, what's your overall prognosis?
Sure. Yeah. Good morning. I thought actually it was a pretty good quarter. I think the two large markets that we operate in, the India business and the US business, both had pretty good growth. I think net revenue increased 5%, but between the two of them, the US grew 18% and the India market grew 9%. So those are the two big markets. The API business has been muted, and I said last year that it will be muted for a couple of quarters. This is largely transactionary in nature, and I do believe that the API business, which we've been growing at at least a 10 to 15% CAGR over the last couple of years, will continue that growth by the end of this year. The ROW business has also been like a 25% growth kind of a CAGR for us over the last 5-7 years. And that too is on a good wicket. There's a huge order book. The only reason for this is down is we've just had too many orders, and we just couldn't ship out due to supply constraints. I expect that by the second half of the year, we'll be back to this kind of growth that we've been seeing.
All right. Hi, good morning. Thanks a lot for joining in. On the US business itself, I recall earlier you had said that you were looking to grow in double digits. This time around, you've grown by close to 18%. So what kind of a number should we work with for the year? And also that pricing erosion pressures, that seems to be abating quite a bit.
Yeah, so I'll take the US business. Actually, you also asked me about the launches. We had guided for 20 plus launches in this financial year. I think we're on the track for that. The first quarter, we just did 2 launches, but we did receive 11 approvals. So I think we're on track. I think next quarter we'll launch another 10, 12 products at least, and then we'll catch up by the end of the year. So there's a whole pipeline of launches coming. So that's one aspect of it. Pricing erosion continues to remain in the US market. We do see double-digit erosion in the market. Is it a little better than it was a couple of years back? Yeah, maybe. But of course, we've come off a higher base. So pricing erosion is there. It's just a matter of being there. You have to be compliant. We recently had an FDA audit at our facility, also at our main formulation facility, F1, which was passed without any observation. So that is a good sign for us. And in terms of the growth, the last quarter was a good growth in the US market. It was a little lumpy in terms of there were a few exceptional items that we received. We got some orders. But on a steady state, I'd said that we should grow the US business at least 10 to 15% this year.
All right, 10 to 15% for the US business this year, first quarter 18% because of some lumpiness. Pranav, I wanted your thoughts on your animal healthcare business as well. It's a business that has been growing upwards of 20-25 odd percent. You had guided for that 20-30% sort of range in the next couple of years as well. Are you on track for that? How did that business perform in the first quarter? And what's the prognosis here again?
Yes, absolutely. I think the animal business has been it's a really well-run business for us. I think it's one of the better-run animal health businesses in India. And it's been doing pretty well. If you see, that's got a CAGR of about 28% over the last 5-7 years. Keeping up with that trend, the animal business grew by 23% in this quarter as well. And we hope to keep growing that business. We're adding more products and we're adding more field force on that as well.
So 20 to 30% was your range. For the end of this year, you will be closer to 20 or closer to 30?
Let's see how it goes. I think it's, if you see historically, it's been upwards of 20%. It's been closer, actually over 25. But I think as we go, its base is getting bigger. I hope to grow it at least more than 20%.
We have focused a lot on the top line, Pranav. Then now let's get to the profitability. Margins, I recall you telling us that in the next few years, you see that moving to higher double-digit margins and then breaking to the 20% mark. However, in the first quarter, it came up to close to 200 basis points on a sequential basis. For the year, what's the number we should be guiding for? And from here on, do you expect an improvement for the remainder of this year?
Yeah. So we don't give a guidance on our margins for the year, but you're right. I'm quite clear that over the next couple of years, we will see our EBITDA margins, which were down actually more, to go back up to the 18, 19, 20% kind of levels in the next couple of years. And a few reasons why this will happen. One, our R&D spend, which used to be about 14, 15%, is now down at about 7 to 8%. And I think it will stay in that level. Number two is we have a lot of these new facilities, the new capabilities that we've created, which are creating a little bit of a drag on the margins. But as we start ramping these up, which will happen in the next couple of quarters, you'll see an automatic improvement in the EBITDA. Compared to last year, where we had a EBITDA of just, I think, shade under 15 or close to 15%, we'll do much better this year. The first quarter compared to the sequential quarter was lower because Q4 was a little lumpy in nature because we had some PLI benefits and some other stuff. But moving forward, the goal is there that we should get to the 18 to 20% EBITDA in the next couple of years.
All right, 18 to 20% by when? Because, I'm looking at a brokerage note and they expect 18% in FY26. Do you think you can outpace that, get to 20% by FY26, FY27?
Well, internally, yes, we'd have we don't give a guidance, but we aspire to have...
No, your internal targets, basically. We're not looking for a guidance for the street.
And Pranav, you have an aspiration, right? We can term it as an aspiration.
Absolutely. Aspiration is always the aspiration. You want to do well. But a few things which are out of our control are the price erosion in the US market and how it pans out. So I think we'd rather grow it consistently and have a more sustainable business rather than a one up, one down.
All right, just a final question before we let you go. The Entresto generic, you had a settlement with the innovator out there. You are hoping for some sort of clarity coming in the next couple of weeks. Just wanted to understand what happens once you get some clarity. Either way, whether you are allowed to launch it or not. We just want to understand both the scenarios here.
So I think, Entresto is one of the bigger launches that is coming up in the market. We will not be in the first wave. We will be there at some point as per the terms of our settlement, which I can't disclose. But it's an interesting market, and we're looking forward to seeing how it pans out. I think the next couple of weeks, next 3-4 weeks, we'll get a lot more clarity how the market's going to go, and we'll decide our strategy based on that.
Okay. All right, Pranav, appreciate you joining in and giving us those details. You're optimistic about growth in various segments, including animal as well as the US business. Margins should be headed towards 18 to 20%. Either in the next few months or the next few years. We'll track that. Appreciate you joining in. Well, time to move on then, and time to get you some ideas for profit from Money Control Pro. We have an idea that's coming in from our ideas for profit from Neha Dave. Let's go across to her. Neha, take it away.
Today's stock idea is the CSB Bank. CSB Bank posted a muted performance in Q1 FY25. While the bank reported a strong loan growth, profitability was dragged down by a sharp fall in margins and higher operating expenses. The key question is then, why should investor consider CSB Bank? While the bank's return on asset has declined to 1.3% in Q1 FY25, management's guidance is very encouraging. Management has guided for improvement in margins, asset quality and cost-to-income ratio going forward. The bank is confident of achieving return on asset between 1.5 to 1.8% in FY25. While the guidance is positive, the real reason to consider CSB Bank is because of its gold loan portfolio, which constitutes around 50% of the bank's loan book as of June end. Thanks to high yields on gold loans, the bank could maintain the net interest margin above 4% in Q1 FY25 despite the rise in cost of funds. The bank's credit cost is also on the lower side because of the gold loans. While capital is not a concern for the bank because of the strong parentage of Fairfax Group and as the capital adequacy ratio is comfortably about 20%, lending against gold helps the bank to conserve capital due to lower risk weight on the gold loans. Overall, the bank benefits immensely because of its gold loan portfolio that generates higher yields, has lower credit cost and lower risk weights. Now talking about the valuation, CSB Bank is trading at around 1.2 times the book value estimated for FY26. The valuation is attractive given the guidance on improvement in return ratios and a huge growth potential on a small balance sheet. Though the execution risk remains, the valuation re-rating along with the earnings growth can drive the stock upside. That said, the speculation about a potential merger with IDBI Bank can weigh on the stock performance in the near to medium term, and hence only long-term investors should consider this stock.
All right, that's about an idea for profit. Take a short break, come back. On the other side, we have another management joining in. Pankaj Poddar, the Group CEO of Cosmo First, joins in to discuss the company's quarter gone by.
Welcome back. We'll keep an eye on a couple of stocks in the broader markets. Gujarat Gas has suddenly moved to the low point of the day, so we'll try to find out what's gone on there. But for the time being, it's a sharp decline. The stock from the green has moved into the red, so that one comes up for you on the screen. NMDC has been reeling under pricing pressure cuts, so that one as well is a little bit lower. But stocks that are taking off actually, NBCC, big spike out there on that one. And Oil India, Sonal had told us earlier today that those numbers are quite good. The stock is holding with a gain of around 5.5%, Manglam.
A couple of these cash market stocks doing extremely well as well, Nigel. I'm looking at Godfrey Phillips. Yesterday, post-market, they reported their presentation and that indicated there was a 26% volume growth in their cigarette business. And that compared to ITC of about 2.5%. And over the last 6 quarters, Godfrey's volume growth has actually been outpacing ITC over the last 5 out of 6 quarters. That tells you that they are gaining market share. And on top of that, the trigger of them selling their retail business is also something, we'll keep an eye out on. And keeping an eye out on another retail player as well, Spencer's Retail. We've heard from, the RPSG group on the growth prospects of the company, etc. They have been acquisitive in nature. Spencer's Retail. So you have a retail asset on the block. Will this one be, interested in buying that or not? This is a point that we put on the table. That stock is up around 10.5%. We'll keep an eye out on how that pans out. Take a short break, come back, get you more on the markets and get you the promised conversation with the management of Cosmo First. Welcome back. You're watching us here on Chartbusters. Let's talk about Cosmo first. The company posted a 121% rise in profit after tax on a year-on-year basis, led by an EBITDA jump of almost 50% as well. Pankaj Poddar, the Group CEO of the company, joining in to discuss the earnings further. Thanks a lot for joining in. It's been a strong start. You're off to the Flyers in the first quarter of this year. So the natural question that one asks is that what's your target for the entire year, at least on the revenue, volume, margin front?
Yeah, hi everyone. So on the revenue side, we feel that we have already done close to 690, and we feel we should be around 3,000 crores for this year. And as far as the EBITDA numbers are also concerned, things are looking good from here. So we have done around 12% EBITDA in this quarter, and we do expect that things should get better from the current quarter numbers.
How much better?
It's difficult to predict, but it should be better than the first quarter.
All right. Hi, Pankaj. Congratulations on a good showing in the past quarter. So good on you. Let's get a couple of numbers going. Could you tell us how much did injection molding contribute to revenues in the first quarter? And how do you see this number scale up?
So see, the Cosmo plastic, the rigid packaging business is new for us. It's hardly a few quarters old. Injection molding has just started in the last quarter. The run rate, we closed, I would say, June month at 3 crores, in July at 3.5 crores. So month on month, it's going up. And it will continue to grow because right now we are hardly 20-25% utilized. So as we move along, capacity utilization will get better.
Got it. What about specialty sales as a percentage of the volumes in quarter one? I think was around 69%. Where does this number head? Because that's what will help margins, right?
Absolutely. And this, I would say that last year was not great for us, especially because of whatever was going on in Europe and America. So those markets are recovering well. And, vis-a-vis last year, we have grown by 5% from 64 to 69. And in fact, July, we did even much better. We crossed 70. And we expect that by the year end, it should at least touch 75, if not more.
Okay. What about the smaller part of your business? You're saying you're looking at consolidation of Ziggly. What's the current run rate out there? Small, but tremendous potential.
Yes, so Ziggly, we have been consolidating in the last quarter, I would say. We have been able to now bring down our losses very significantly. We were operating at close to 3.7 crores monthly EBITDA loss, and we have now brought it down to 2.5 crores through taking a lot of rationalization in the measures. The other good thing is that the same store sales growth is growing at a very nice pace. We are growing close to 6 to 7% month over month when it comes to same store sales growth. So we expect that within this year, we should be close to doubling our retail revenue from 23 stores that we had opened till March. We're also in, opening more stores now. So you will start seeing more stores growing. Right now we are at 24. And by the year end, we expect that we should be close to 40 number when it comes to the entire Ziggly. The other thing that we are doing in Ziggly is that one side, we have put a lot of emphasis on the vet care practice now, where we are doing complicated surgeries. So vet care as a practice. So we are one company which is giving the entire ecosystem to the customer, whether it's grooming, it's vet care, as well as the products. Similarly, we've started launching a lot of private labels and signature range, which has been loved by the customers very nicely. Yeah.
So what is the average throughput per store? If you could give us a sense currently, you said that SSSG is about 6 to 7%, but if you just look at a per store sort of revenue, what is it right now?
Yeah, so at a GMV level, it's close to 11 lakhs.
11 lakhs per store. So by the end of this year with 40 stores, you should be closer to around 4 crore in terms of GMV, right? 4.5 crores.
Yeah.
The other thing that I wanted to know in the pet care business itself is that, a lot of large entrants are making their announcements. Yesterday itself, we had Godrej Consumer saying that they are eyeing the pet nutrition business. So you're just a retailer here, right? There's no competition from new entrants who would come into this space. Just wanted to understand your right to win.
Yeah, so right now there are, I would say from retailer perspective, there are 3 players. And again, omni-channel, I would say we are the right fit because we are the only company which is offering complete ecosystem, both digitally and in retail space. And that way we feel our model is very strong, and we continue to grow very nicely month over month. So whether it's our online, where we are very focused on making sure that we only sell high margin products so that it can become a profitable business for us in the times to come. And similarly in the retail space, where we are focusing on the right areas, and we feel that our service mix could go as high as 55 to 60% in the times to come. We are already hovering at 45%, and services are actually growing faster for us. So we should be doing well there.
And the demerger happens when? At 100 stores or at 150?
Difficult to give any date at this stage. Definitely, we have to do the demerger. We have already set up a new legal entity, which is Ziggly Vet Ventures Private Limited. We made the announcement a few months back for that. But demerger will take some time. We have to decide on the right time, but it's not going to be too long. It should be within the next couple of years.
Okay, all right, Pankaj, appreciate you joining in, sounding reasonably optimistic about prospects of business. We'll hold you to these numbers, wishing you a good day and looking forward to chatting up with you at the end of this quarter. Well, for the time being, we have done on Chartbusters. That's it from Mangalam, myself, and the entire team that put this show together. Trading hours waiting for you on the other side. Don't go anywhere.